Hello, everyone. This is ATT UK's UAE VAT diploma, which is a prerequisite to the UAE's FTA approved tax agent program. And we are going to study chapter 23 on penalties in VAT. So, uh, this chapter covers penalties, including administrative penalties and penalties for tax evasion, the tax procedures law and its regulations as they were issued. They set out the position for FTA regarding all the penalties. So we're going to have a more detailed look into it. When does the penalties apply? When do the penalties apply? Article 24 of the tax procedures law sets out some of the offenses or violations that are subject to the administrative penalty. Now, those violations are the person conducting business or having a tax obligation failing to keep the required records and other information specified under either the tax procedures law or the VAT law. So basically record keeping. The person conducting business or having a tax obligation failing to submit the data, records and documents related to tax in Arabic to FTA when requested. So Arabic language is a must when the FTA requires it. The taxable person failing to submit a tax registration application within the time frame specified in the VAT law. There are very strict rules for it. When there's a look back test, there's a look forward test, etc. You have studied it in another chapter in this diploma. The registrant failing to submit a deregistration application within the time frame specified by the VAT law. So naturally, this again is another angle that sometimes a taxpayer, a taxable person, falls below the voluntary registration threshold even. So at that time, it becomes mandatory for that person to deregister. And if they fail to do that, if he fails to do that, there is penalties. The registrant failing to inform the FTA of any case that requires the amendment of the information pertaining to their tax record kept by the FTA. So delay in updating of the tax record or updating of the information to FTA. The legal representative failing to inform the FTA of their appointment within the specified time frame, in which case the penalties will be due from the legal representative's own fund. So even legal representatives and tax agents are under obligation. The legal representative failing to file a tax return within the specified time frame, in which case the penalties will be due from the legal representative's own funds. So what was this about? Legal representative failing to file a tax return within the specified time frame. So yeah, I mean, legal representatives can be are actually ultimate responsibility is theirs to file the tax return. So if they fail to do that, there will be a penalty applicable there. The registrant failing to submit the tax return within the time frame specified in the VAT law, taxable person is also responsible, not only the responsible or the legal representative. The taxable person failing to settle the payable tax within the time frame specified in the VAT law. So naturally, liability has to be paid together with the filing of the VAT return. That there's always a 28-day time period allowed immediately after the tax period. So within that time, money has to be paid. All the tax obligations have to be settled. The registrant submitting an incorrect tax return. So there can be an error in filing while reporting and filing the tax return. Taxable person or the taxpayer submits a voluntary disclosure in relation to errors in the tax return or the tax assessment or refund application. So the taxable person or the taxpayer submits a voluntary disclosure in relation to errors in the tax return. So even if you have submitted a voluntary disclosure about any error in the tax return, that does not absolve you from the non-compliance, you will still have to pay the penalty that becomes due. Taxable person or the taxpayer fails to submit a voluntary disclosure in relation to errors in the tax return. So a taxable person or a taxpayer fails to submit a voluntary disclosure in relation to errors in the tax return or the tax assessment or refund application before being notified that they will be subject to a tax audit. So, when the audit arrives, then there's no point in doing the voluntary disclosures and all that. So if you fail to do voluntary disclosures before the notification of tax audit is received, if you're a taxable person, and then that's a violation, that's a non-compliance, and if you do that, it will still be seen as an offense, and you'll have to pay the penalty. The person subject to a tax audit, his tax agent or legal representative, failing to offer facilitation to the tax auditor. The person subject to a tax audit, his tax agent or legal representative, failing to offer facilitation to the tax auditor, in which case the penalties will be due from the person's tax agent's or legal representative own fund as applicable. So, there was a tax audit in place, so agent or legal representative did not cooperate, did not facilitate the auditor. That's a very serious offense. The registrant failing to account for tax on behalf of another person when the registered taxable person is obligated to do so under the VAT law. The registrant, uh, meaning the VAT registered person, if they were supposed to account for tax VAT on behalf of another person, and like there may be a situation where they have to record, well, like the third party raising invoices, etc., and they fail to do so, they'll be penalized. Any other violation specified under the VAT law or a cabinet decision. A number of penalties, offenses have been identified for, and penalties are there. Article 76 of the VAT law sets out the position regarding administrative penalty assessments for specific VAT violations. So this is VAT decree laws, Article 76, mother law. Without prejudice to the provision of the law on tax procedures, the FTA shall issue an administrative penalty assessment to the person and notify the person of the same within 5 business days from the date of issuance in any of the following cases. So there's FTA does the assessment of what amount of penalty is applicable to a person. I mean, once they issue that assessment, so the letter is actually finalized or prepared or issued, immediately within 5 business days, this has to be informed to the taxpayer, to the taxable person. Failure by the taxable person to display prices inclusive of tax in accordance with Article 38 of the VAT law. We should know, every taxable person is required to display the prices inclusive of tax in accordance with the law. If they fail to do that, there's penalty. Failure by the taxable person to notify the federal tax authority of applying tax based on the profit margin scheme. So we have, in another chapter, we've studied profit margin scheme. If the taxable person fails to notify the FTA of applying tax on profit margin scheme, then they will be penalized. Failure by the taxable person to comply with the conditions and procedures related to keeping the goods in a designated zone or moving them to another designated zone. So if a person was keeping goods in a designated zone or they're moving to another designated zone, they're supposed to inform FTA and they should comply with the requirements. So multiple requirements are identified in another chapter. So if the taxable person fails to comply, there will be a penalty. Failure of a taxable person to issue a tax invoice or an alternative document when making any supply. Failure of a taxable person to issue a tax invoice or an alternative document when making any supply. Uh, Failure by the taxable person to issue a tax credit note or an alternative document. So if there was supposed to be a credit note issued, it was not issued, or alternative document that was supposed to be issued was not, then naturally it will be a non-compliance. Failure by the taxable person to comply with the conditions and procedures regarding the issuance of electronic invoices, which is a relatively newer topic. So if they fail to issue electronic invoices and electronic tax credit notes, naturally this will be seen as a non-compliance. Note that some offenses are listed in the tax procedures law and the VAT law, but not specific penalties. But the specific penalties and how to calculate them are reflected in Cabinet Decision number 49 of 2021. So there are certain schedules that have been provided in that Cabinet Decision number 49 of 2021, uh, and different penalties are identified. The failure of the person conducting business to keep the required records and other information specified in the tax procedures law and the tax law. So basically record keeping, failure to maintain records. How much penalty? AED 10,000 for the first time and 20,000 in the case of repetition. Failure of the person conducting business keep required records. Second, the failure of the person conducting business to submit the data, records, and documents related to tax in Arabic to the FTA when requested, straightforward 20,000 dirhams. Wow. Arabic attracts 20,000 dirhams of penalty if the translation is not provided. The failure of the taxable person to submit a registration application. Failure of a taxable person to submit registration application within the time frame specified in the tax law, 10,000 dirhams of fine. The failure of the registrant to submit a deregistration application within the time frame specified in the law, so 1,000 dirham fine in case of delay, and on the same date monthly thereafter, up to a maximum of 10,000 dirham of fine. So they on the same date monthly thereafter. So 1,000 dirham per month basically, and up to it will be capped at 10,000. Failure to deregister. Now the next one, fifth one, the failure of the registrant to inform FTA of any circumstances that require the amendment of the information pertaining to its tax records kept by FTA. The record maintenance and updating. If taxable persons don't keep their records maintained and updated, what will happen? 85,000 for the first time and 10,000 in the case of repetition. So that's another very important aspect that we have to take care of. So the failure of the legal representative of the taxable person to inform FTA of its appointment as legal representative within the specified time frame, in which case the penalties will be due from the legal representative's own funds. So if a legal representative has been assigned, the failure of the legal representative of the taxable person to inform FTA of its appointment as legal representative. So if they fail to inform FTA, then there's a penalty of 10,000 dirhams. The failure of the legal representative for the taxable person to file a tax return within the specified time frame. Failure of the legal representative for the taxable person to file a tax return within the specified time frame, in which case the penalties will be due from the legal representative's own fund. Now, what is the nature of the penalty again? Let's see the failure of the legal representative of the taxable person to file a tax return. So, yeah, okay. So, legal representative is supposed to file the tax return on behalf of the taxable person. If he fails to do that within the specified time frame, so delay means 81,000 for the first time, 2,000 in the case of repetition within 24 months. failure of the registrant to submit the tax return within the time frame specified in the tax law. Failure of the registrant to submit the tax return within the time frame specified in the tax law. So how much will be the penalty for that? 81,000 for the first time and 2,000 in the case of repetition within 24 months. Next one, the failure of the taxable person to, now that's a serious offense. Failure of the taxable person to settle the payable tax stated in the submitted tax return or voluntary disclosure or the tax assessment he was notified of within the time frame specified by the tax law. So there's quite a few things. The taxable person shall be obliged to pay the penalty applicable to the late payment of payable tax up to a minimum of 300%. That's first of all the capping. That the taxable person shall be obliged to pay the penalty applicable to late payment of payable tax up to a maximum of 300% pursuant to the filing. Upper limit is 300%. How will it go? 2% of the unpaid tax shall be due on the day following the due date of payment where the settlement of payable tax is late. So straightforward. First of all, 2% is straightforward applied. Then a 4% monthly penalty is due after 1 month from the due date of the payment and on the same date monthly thereafter. So then there will be 4% per month penalty applicable on the unsettled amount, tax amount to date. So every month 4% will keep accruing. That's going to be a lot. For the purposes of this penalty, the due date of payment in the case of the voluntary disclosure and tax assessment shall be as follows. So due date they are mentioning. Uh, Due date payment in the case of voluntary disclosure and tax assessment shall be as follows. 20 business days from the date of submission in the case of a voluntary disclosure and 20 business days from the date of receipt in the case of a tax assessment. So if FTA performs a tax assessment and they issue that order, then upon the receipt from the date of the receipt, 20 business days is the duration within which the money has to be paid. Same thing, similar thing for the voluntary disclosure. The day you file a voluntary disclosure, you have 20 business days to make the payment. Mm. The submittal of another penalty or a non-compliance, the submittal of an incorrect tax return by the registrant for wrong tax return. So what happens for that? Fixed penalty shall be applied. 81,000 for the first time, 82,000 in case of repetition. So that's a fixed penalty for an incorrect tax return. As an exception to clause 1 of this penalty, if the incorrect tax return results in a tax difference less than the fixed penalty listed in clause 1 of this penalty, a penalty equal to that tax difference of at least 8,500 shall be imposed. A penalty equal to that tax difference of at least 8,500 shall be imposed. So at least 500 of the penalty shall be imposed if the overall value of the tax difference is less than these two figures, 1,000 for the first time, 2,000 for repetition. Anyone correcting their tax return prior to the due date of payment shall be excluded from the penalty imposed under clause 1 and 2 of this penalty. So that's a facilitation provided that if somebody finds out about the mistake and they incorrect tax return and before the due date, expiry of the due date, last date, they make the correction, they resubmit the tax return correctly, then they will not be applied this penalty. The submittal of a voluntary disclosure by the person or taxpayer on errors in the tax return, uh, tax assessment, or refund application pursuant to Article 10, 1 and 10(2) of the Tax Procedure Law. Submittal of a voluntary disclosure by the person taxpayer on errors in the tax return, tax assessment, or refund. So the taxable person found out that there were errors and they gave a voluntary disclosure. Uh, so what will happen without prejudice to the potential consequences of the penalty mentioned in clause 10 of this table, a percentage-based penalty shall be applied on the difference between the tax that was calculated and that which should have been calculated pursuant to the following. So, the amount that was actually calculated and based on the voluntary disclosure, the amount that should have been calculated or paid. So, if there is a difference between the two amounts, so 5% of the difference shall be the penalty, where the voluntary disclosure is submitted within 1 year from the due date of submission of the tax return, where this voluntary disclosure is submitted within 1 year from the due date of submission of the tax return. The tax assessment or the relevant refund application. Tax assessment or the relevant refund application. So that was 5%, but there is more. It can be 10% on the difference where the voluntary disclosure is submitted within the second year. So, following the due date of submission of the tax return, the tax assessment or the relevant refund application. So delay has become more, like within 2 years, and then there is probably more delay. 20% on the difference where the voluntary disclosure is submitted within the third year following the due date of the submission. Let's continue going. Third year it was 20%. 30% if the voluntary disclosure happens in the fourth year, and 40% if of the difference where the voluntary disclosure is submitted after the fourth year from the due date of the submission. So this is progressive uh, approach of increasing the penalty based on the time that is taken. So we just read about submittal of voluntary disclosures by the person or taxpayer on errors in the tax record, and there is a progressive taxation mechanism there. Now, the next offense and penalty, the failure of person or taxpayer to voluntarily disclose on an error in the tax return, tax assessment, or refund application pursuant to Article 10(1) and 10(2) of the Tax Procedures Law before being notified by the FTA that it will be subject to tax audit. So once the tax audit opens up, then you cannot file voluntary disclosure, otherwise you'll be penalized. So without prejudice to the potential consequences of the penalty mentioned in clause 10 of this table, person will be subject to a penalty of 50% on the amount of error. That's a lot. A penalty of 4% for every month or part of the month of the following. The unpaid tax, meaning there's a penalty, progressive, there's a percentage terms penalty for every month, 4% every month or part of the month, in case some duration is less than a month. For the unpaid tax to the FTA from the date the payment is due for the relevant tax period until the date of the receipt of the tax assessment. There's all the duration that has passed during which the tax was not paid, obligation was not settled. There's a 4% per month penalty, and before that, a penalty of 50% of the amount of error is there. Then the tax that was not returned to the FTA due to ineligible refund from from the date of the tax refund until the date of receipt of the tax assessment. So again, the date of the tax refund until the date of the assessment, that duration, uh, there will be a 4% per month penalty applied on this. Another offense, the failure of the person conducting business to facilitate the work of the tax auditor in violation of the provisions of Article 21 of the Tax Procedures Law. So basically, failure of the person conducting business to facilitate. If a tax auditor is there, the company, the responsible person, the tax agent, everyone is supposed to facilitate and cooperate with the tax auditor. If they don't do that, 20,000 dirhams worth of fine is imposed. The failure of the registrant to calculate tax on behalf of another person, where the registrant taxable person is obliged to do so under the tax law. So, if the taxable person is supposed to account for tax on behalf of another person, and he fails to do that, what will happen? What kind of penalties will be applicable? The registrant shall be obliged to pay the penalty applicable to late settlement of payable tax up to a maximum of 300%, a maximum of 300% pursuant to the following. What conditions? 2% of the unpaid tax is due on the date following the due date of payment where the settlement of the payable tax is late. To begin with, what the last day of payment of tax was there, tax was not paid, the very next day there will be a 2% penalty of the unpaid tax to begin with. That's the first component. Then 4% monthly penalty is due after 1 month from the due date of payment. So if the 1 month completes, there's a 4% more penalty to be applied on the unpaid tax, but that's not it. And on the same date, monthly thereafter. And then the same date that comes every next month, this 4% will keep accumulating on the unsettled tax amount to date. So until the time this tax amount is actually settled. So there will be penalty coming in. For the purposes of this penalty, the due date of payment, for the purpose of this penalty, the due date of payment in the case of voluntary disclosure and tax assessment shall be as follows. So we know that we have studied this before as well, that 20 business days from the date of submission in case of voluntary disclosure, and 20 business days from the date of receipt in case of a tax assessment. So if the FT has done a tax assessment and it was received on day 0, then you have 20 business days. Similarly, if you uh, did your voluntary disclosure on day 0, then you have until 20 business days from the date of the submission of the voluntary disclosure. That's how it will be. So uh, that will be considered as the due date. Now, one more offense and the corresponding penalty. Let us go through that as well. A person not accounting for any tax that may be due on the import of goods as per the tax law. So if a person does not account for any tax on import of goods, so what will be the penalty? 50% of unpaid or undeclared tax. So 50% of the unpaid or undeclared tax, that will be the amount of penalty that the person will have to pay. Now, there are some more violations that have been mentioned. Uh, And I think, and these violations, administrative penalties related to the implementation of Federal Decree Law number 7 of 2017 on excise tax. So let us have a look of on the excise tax as well. Description of violation: the failure of the taxable person to display prices inclusive of tax. From an excise tax perspective, if the person does not disclose the or display the prices inclusive of tax, the penalty is 5,000 dirhams. The failure to comply with the conditions and procedures of transferring excise goods from a designated zone to another designated zone, and the mechanism of preserving, storing, and processing such excise goods. So, if you don't comply with the procedures of transfer from designated zone to another one, there is a penalty that will be applicable. The penalty shall be higher of 50,000 or 50% of the tax, if applicable, chargeable on the goods in relation to the violation. So uh, they're quite a harsh penalty, 50,000 or 50% of the tax, whichever is higher. The failure of the taxable person to provide federal tax authority with the price list of the excise goods that it produces, imports, or sells. So if the person does not provide that price list, then the penalty will be AED 5,000 for the first time and 10,000 in case of the repetition. So violations, there's another table: violations and administrative penalties related to implementation of the Federal Decree Law number 8 of 2017, value added tax. There's another table. So let's see: the failure of the taxable person to display prices inclusive of tax, the penalty is 5,000 dirhams. Failure of the taxable person to notify FTA of applying tax based on margin, that is the profit margin scheme. So that will be the 2,500 dirhams of penalty. So for profit margin scheme. Failure to comply with the required conditions and procedures related to keeping the goods in a designated zone or moving them to another designated zone. So again, it is similar to the penalty we read in the excise related penalties. Penalty shall be higher of the 50,000 dirhams or 50% of the tax, if applicable, chargeable on the goods in relation to the violation. Those goods which experience violation while being stored in a designated zone or being transferred from one designated zone to another one. Failure of the taxable person to issue a tax invoice or alternative document when making a supply. If you don't issue a tax invoice, 2,500 dirhams for each detected case. That's a very stringent penalty. Failure of the taxable person to issue a tax credit note or the alternative document. So there was some sort of sales return or reduction in the collectible from the customer. So you had to issue a tax credit note and you did not issue. Uh, so then the penalty will be again same as the tax invoice penalty, which is AED 2,500 for each detected case. So now that is very harsh if you really think about it, because each detected case. So how many instances of non-compliance are there? Every instance that is detected, it will attract 2,500 dirhams of tax penalty. That can be serious in case, let's say 10 or 20 instances are detected. We're looking at easily 25 to 50,000 dirhams of penalty. That's a lot. The failure of the taxable person to comply with the conditions and procedures regarding to the issuance of a tax invoice and a tax credit note electronically. So if there was an electronic invoice or credit note to be issued and the taxable person did not do that, then again 2,500 dirhams for each detected case. Now, the amount of the penalty. Administrative assessment uh, impose specific administrative penalties in respect to each violation, which shall not exceed twice the amount of the tax due. So there's a default cap placed on it for on administrative penalties, and that they cannot exceed twice the amount of the tax due, in respect of which the administrative penalty was levied. Also, the imposition of an administrative penalty shall not exempt any person uh, from the responsibility to settle any payable tax. So, okay, I have settled the penalty. So I think I have settled my obligation. No, that is wrong. The original tax you have to pay. Just by paying the penalty, you don't get, exemption from the original uh, tax. A responsibility to settle any payable tax which is still outstanding in accordance with the VAT law. So principal has to be settled. Penalties is a later thing. Reduction of the penalty. If the FTA imposes or collects an administrative penalty from any person for violating the provisions of the tax procedures or the tax laws, the committee, subject to a decision by the chairman of the board of the Federal Tax Authority, to form such committee, may, according to the presentation of the DG, issue a decision approving the payment by installments of the penalty amount, or totally or partially waiving or refunding it, pursuant to Cabinet Decision number 105 of 2021. So that depends on the discretion of the Director General of Federal Tax Authority. To qualify for paying penalties in installments, the amount must not be less than 50,000. To qualify for installments, amount must not be less than 50,000, and the penalties should not be under dispute in court. So penalty should not be under dispute in court. So if that happens, so the monthly installments can be uh, approved. The applicant should have no outstanding taxes for the period in question. That's also one of the requirements. Such requests for installment payments or waivers must be submitted using specific forms and include required information such as tax registration number and explanations for the request. Yes, so there are forms, there are specified uh, formats identified in which all the requisite information has to be provided along with the TRN and other information that FTA seeks. Note the request is only in relation to penalties and cannot be made for the tax payable. So this request for installments can only be for penalties, not for the principal amount of tax. FTA reviews the requests and presents them to the committee, which decides within 60 business days. The committee's decision is final. Which decides within 60 business days, the committee's decision is final. And applicants are notified within 10 business days. The committee decision. So the moment FTA reviews the request and presents them to the committee, they decide in 60 business days, and then the committees gives a decision, and applicants get notified within 10 days. So otherwise, non-response shall be deemed a rejection of the request. So what happens? Committee's decision is final and applicants are notified within 10 business days. Otherwise, non-response shall be deemed a rejection of the request and the decision of the committee shall be deemed final. So, uh, you know, if there is no response by FTA or for that matter, the applicant, committee's decision will crystallize. Otherwise, uh, there would be once the decision of the committee is received, the FTA or the applicant can raise this matter to the committee, and if there are any other recourses provided in this regard. Administrative penalties assessment should include the following minimum information: the person's name and address, taxable person's tax registration number, violation for which administrative penalty has been assessed, the meaning all the particulars, all the nature of the violation. Administrative penalty summary, including the amount of administrative penalty imposed and the amount of tax to which the imposed administrative penalty relates, if applicable. So all the summary, if there is a calculation involved, everything is included. Total administrative penalties due to the FT, everything is identified on the assessment issued by the Federal Tax Authority. Regarding voluntary disclosures, once the due date for submitting a VAT return has passed, um, once the due date for submitting a VAT return has passed, the taxpayer can no longer amend the submitted return. Therefore, to correct any errors in previous tax returns, the taxpayer is typically required to submit a voluntary disclosure. A voluntary disclosure is a mechanism used to correct errors in a previously submitted tax return. So, something you already submitted by way of a tax return. Now you found out there is a mistake. Now you can submit a voluntary disclosure, uh, and through this process, the taxpayer notifies FTA of any errors or omissions in a VAT return, tax assessment, or refund application. A taxable person must submit a voluntary disclosure in the following situations. So, what are those situations? If the payable tax was understated, um, if the person overstated a refund in a VAT refund application, if the person made an error uh, that does not change the amount of due tax. So now that's a very interesting angle. A taxable person must submit a voluntary disclosure in the following situations if the payable tax was understated. That's a mandatory requirement, underpayment of tax. If the person overstated a refund, so person got more money by way of refund, that's also not good. That's see, if the person made an error that does not change the amount of due tax. So a relatively lighter situation could be that there was an error, but the overall payment of tax did not change. So, different these three scenarios. However, if the understated payable tax for a tax period is 10,000 or less, the person should correct the error in the VAT return where the error was discovered. So, you can correct the original VAT return where the error was discovered. This 10,000 rule applies only to understated payable tax and is valid as long as the person is still required to submit VAT returns when the person is still not deregistered. So, according to FTA decision number 8 of 2024, a voluntary disclosure must be submitted for errors or omissions in a tax return that do not result in a difference in due tax. So, that is also, that's a clarification FTA has already provided. So, even if there is a situation where no change in the payable tax was there, but there was an error, you still have to do a voluntary disclosure. These cases are as follows: reporting standard rated taxable supplies under the wrong emirate. Yeah. So now emirate wise reporting was erroneous. Incorrectly reporting zero rated taxable supplies either by understating or overstating them. So zero rated supplies, there was no output tax due, but output tax collected, but the amount of supplies was slightly uh, or or even significantly different. So overall tax implication did not happen, but the disclosure was wrong. Incorrectly reporting exempt supplies are either by understating or overstating them. So exempt supplies were also, if they were wrongly reported, even that has to be identified. Although yes, because of exempt supplies or wrong reporting of exempt supplies, there could be an issue on the recovered input VAT. So that has to be seen, and that could result in a difference in terms of the tax payment. That one has to be cautious about it. A taxable person may choose to submit a voluntary disclosure in the following situations. If the payable tax was overstated, uh, so we submitted a tax return saying that we have to pay such and such amount, whereas actual payable was less. If a VAT refund was understated in a VAT refund application, so we claimed 100 dirhams, actually it was higher, 150, 200 dirhams. So understatement of the VAT refund claim. So even in that case, uh, a taxable person has the option to submit a voluntary disclosure. So here it is not mandatory. Mandatory situations were identified earlier where there was undue advantage, like underpayment of tax was there, yeah, or over receipt of refund was there, or over claim, or wrong reporting of the information was there, which did not actually result in the amount of payment of tax. Details on the procedures for voluntary disclosure is given in the voluntary disclosure user guide, which was issued in February 2022 by FTA. So now we are coming to tax evasion related penalties. When the penalties will apply, there are general tax crime penalties, which are set out in the tax procedures law and explained below in addition to VAT specific tax crime penalties. It is important to note that tax crime penalties differ from administrative penalties in several aspects. Firstly, the administrative penalties are imposed by the FTA. Okay, administrative penalties are imposed by FTA, whereas the tax crime penalties are imposed by the courts. Additionally, the responsibility for proving the accuracy of a tax return lies with the taxable person. While in the case of tax evasion, the burden of proof rests with the FTA. So evasion is a situation where FTA has to prove that the tax was evaded. Lastly, tax crime penalties are generally more severe than administrative penalties as outlined below. We'll see. Article 77 of the VAT law, which is VAT decree law, the mother law, addresses the VAT specific tax evasion or crime penalties. It provides that if it is proven that a person who is not registered acquires goods comprising of crude or refined oil, uh, unprocessed or processed natural gas, or pure hydrocarbon, claiming that they are a registrant, they shall be considered as having committed tax evasion, and shall be subject to the penalties provided for in the law on tax procedures. So let's read again. If it is proven that a person who is not registered acquires goods comprising of crude or refined oil, unprocessed or processed natural gas, or pure hydrocarbons, claiming that they are a registrant, then they shall be considered as having committed tax evasion and shall be subject to penalties specified in the tax procedures law. The above must be read together with Article 55 of the law on tax procedures. So that's a sensitive situation. The without prejudice to any other severe penalties applicable under any other law, a prison sentence and a monetary penalty not exceeding 3 times the amount of the evaded tax, or either of the two shall be imposed on deliberately failing to settle the payable tax. So three times the amount of evaded tax. So a present sentence and a monetary penalty not exceeding three times the amount of evaded tax, or either of the two shall be imposed on deliberately failing to settle any payable tax. That's one. Deliberately understanding the actual value of revenues or failing to consolidate related businesses with the intention of remaining below the relevant registration threshold. So, deliberately failing to settle any payable tax, deliberately understating the actual value of the revenue. So, uh, if you understate the value of the revenue, naturally you don't pay less amount of tax, right? Or failing to consolidate related businesses with the intention of remaining below the relevant threshold, uh, tax rate or other tax thresholds. So these are all approaches of, avoiding tax. Deliberately imposing and collecting amounts as tax without being registered. That's a criminal offense. Yes, like raising tax invoices, etc., when you are actually not registered. Deliberately, deliberately decreasing the due tax or participating in any form of tax evasion. Uh, if you deliberately decreasing the due tax, if there was any tax that was due, you create artificial fake methods or deceptive means of reducing the tax that was payable to wealth tax authority, or or involving in any of those efforts, that will all be a criminal offense under the tax law. Deliberately committing or omitting any other act which may constitute tax evasion under the decree law or the tax law. Deliberately committing or omitting any other act which may constitute tax evasion under the decree law or tax law. So note that these penalties apply for deliberate acts, acting with intent. Accidental omissions, delays, or oversights, if penalized, would fall within the administrative penalties regime. So that there's a usually in the criminal situation there is a clear intentional misrepresentation is there. A prison sentence and or a monetary penalty not exceeding 1 million dirham shall be imposed on anyone who commits any of the following acts: a prison sentence and or a monetary penalty not exceeding 81 million dirham shall be imposed on anyone who commits any of the following acts. What acts? Deliberately providing false information, data, and incorrect documents to the federal tax authority. Deliberately concealing or destroying documents, information, and data or other material that they are required to keep and provide to the federal tax authority. And stealing documents or other materials that are in the possession of the federal tax authority or deliberately misusing or destroying them. So these type of actions will, there's a prison sentence or uh, and or 1 million dirham worth of penalty. Deliberately preventing or hindering FTA's employees from performing their duties. All of these are criminal offenses, and there's a prison sentence or 1 million dirham worth of penalty, or both. Facilitating or concealing tax evasion carries the same penalties. Facilitating or concealing. Note that a person committing tax evasion, which includes falsifying information submitted to the federal tax authority, may receive a tax-related penalty of up to three times the evaded tax. Note that a person committing tax evasion, which includes falsifying information submitted to the Wealth Tax Authority may receive a tax-related penalty of up to 3 times the evaded tax, a prison sentence, and also a further penalty of up to 81 million dirham has to be taken care of. So, a prison sentence and also further penalty of 1 million dirham may also be applicable. So, what is the scenario? Let me read again. Note that a person committing tax evasion, which includes falsifying information submitted to the authority, well, tax authority, may receive a tax-related penalty of up to 3 times the evaded tax. So, that's the one. That's one. 3 times of the original amount of tax, then a prison sentence and a further penalty of 1 million dirham. That's a lot of penalties. If a monetary penalty has been imposed on several accused in one judgment and for one crime, they shall be jointly liable for such monetary penalty. So, if that, like, this could be a situation where multiple, for example, multiple shareholders are there in a company. Reoffending is considered an aggravating circumstance. Crimes committed up to 5 years earlier are considered. So, reoffending, repeating a criminal activity. So, that's like, this is very, very serious. And up to 5 years, within a duration of 5 years, if someone has committed a crime, it will be seen as reoffending, repeating the criminal behavior. Everyone who has participated in a tax evasion crime shall be jointly and severally liable to settle the tax and any administrative penalties. Everyone who has participated in a tax evasion crime shall be jointly and severally liable to settle the tax and any other administrative penalties of the law on tax procedures. So, uh, everyone involved will suffer basically. The court may publish in its judgment or a summary of it at the cost of the convicted person. So that person who is found guilty, they will bear the cost of the judgment and all the legal expenses if requested to do so by FTA. A penalty imposed for tax evasion does not exempt any person from the liability to settle any tax. So that's actually a funny way to think about it. But I mean, obviously, if there's a penalty that was imposed for tax evasion itself, that does not mean that the person's original liability to settle the tax has been settled because the person has paid the penalty. No, penalty is different, original amount of tax is different, or any other penalty and under any other law. So if there are penalties imposed under any other law, for example, civil transactions law, etc., those penalties will be dealt separately. Note that Federal Tax Authority issued a guide on a program called Raqib to combat tax crimes and evasion. So there's a program properly issued by the Federal Tax Authority. The Raqib program, as detailed in the FTA guide, is a whistleblowing initiative designed to address tax violations and evasion within the UAE. It enables individuals to report suspected instances of non-compliance with tax legislation, such as tax evasion or the proper or the improper issuance of tax invoices by submitting leads accompanied by credible evidence. The program ensures the confidentiality of informants whose identities are safeguarded and not disclosed to unauthorized parties or the reported persons. The program aims to enhance compliance with tax laws by empowering the FTA to investigate and act upon credible reports of violations. So it's a very well organized, structured program, thereby fostering fairness and accountability within the tax system. The guide serves as a comprehensive reference for understanding the requirements and procedures involved in submitting a lead. So, uh, after a TEEP program, now we're going to talk a little bit about the reconciliation process of a tax evasion crime. So, how does the reconciliation process work? What is the reconciliation process? The reconciliation process provides a means by which an individual who has committed tax evasion can avoid criminal prosecution and pay a reduced penalty by submitting an application to the FTA for the reconciliation process to apply. So, kind of a settlement situation. A person who has committed tax evasion, as defined by Article 25.4 of the Tax Procedures Law, risks a prison sentence and a monetary penalty not exceeding 1 million dirham if convicted. It may therefore be preferable to pay the additional amount due under the reconciliation process rather than risk the maximum possible sentence if convicted. From the FTA's perspective, the reconciliation process serves the time and cost involved in criminal court proceedings. The the amounts payable as a fee for using the reconciliation process increase the further along the criminal proceedings process the case has reached and the more serious the offense committed. So there is a fee that is charged for this reconciliation process which increases as the process goes longer or the amount of money gets higher. The person must agree to pay the full amount of tax and administrative penalties owed, as well as an additional amount as a fee for using the reconciliation process. So the person has to, pay the full amount of tax first of all, plus the administrative penalties, so that the reconciliation process may be triggered. Individuals who have committed any of the crimes listed in Article 25(4) of the Tax Procedures Law, but against whom criminal proceedings have not yet been initiated, must pay 50,000 before the FTA will consider the reconciliation process application. So they have to first of all pay 50K so that FTA may consider the reconciliation request. Person must also agree to pay the full amount of any tax and administrative penalties owed. So if whatever the amount of penalties or the original tax, the person has to pay those. They have to agree that we will pay this. Those accused of tax crimes, criminal proceedings have already commenced. In case like criminal proceedings are already started, may also apply for reconciliation as long as it is before the issuance of a conviction judgment. So the public prosecution office will then refer to the FTA to determine whether the reconciliation procedure can apply. So the criminal proceedings were already initiated in the with the court, but no conviction was issued, no judgment was still issued. So that the person can still try to apply for reconciliation process, and in that case, the public prosecution office will refer to FTA and ask whether reconciliation procedure can apply. The fee payable for the reconciliation procedure in this case is for evading tax in the crimes listed in Article 25(2) of the Tax Procedures Law. Full payment of tax and administrative penalties due plus an amount equal to 50% of the evaded tax. So that's a lot. So first of all, there was the original tax liability that the person has to pay that. Then there were administrative penalties applied, meaning understatement of tax, wrong tax return, this, that. That also penalties will have to be paid. But that's not it. Then the 50% of the amount of tax that was evaded, that also has to be paid. That's for tax evasion. For deliberate failure to pay the administrative penalties of the tax procedure law, in that case, full payment of the tax and the administrative penalties due, plus an amount which is 50% of the evaded tax if applicable. So there is no difference between the this penalty and the in the case of tax evasion. So at a non-payment of administrative penalties and tax evasion cases, same kind of penalties will apply. 100,000 dirham for each of the crimes listed in Article 25(4) of the Tax Procedures Law. Uh, if any of these crimes resulted in tax evasion or facilitated or concealed tax evasion. So, 100,000 dirhams have to be paid for the reconciliation process consideration. If any of the crimes resulted in tax evasion or facilitated the concealment, full payment of the tax and administrative penalties plus amount equal to 50% of the evaded tax. Uh, the public prosecution may, after issuance of a conviction judgment and offer seeking the opinion of the FTA, reconcile tax crimes on payment of the following. They may reconcile the tax crimes on the payment of the following. How? For evading tax in the crimes listed in Article 25(2) of the Tax Procedures Law, uh, full payment of the tax and administrative penalties due plus the amount equal to 75% of the evaded tax. That this is higher than the previous scenario. When does it apply? The public prosecution may, after issuance of a conviction judgment. Now, this is a severe case. The court has already issued a judgment, conviction judgment, and after seeking the opinion of the FTA, reconcile tax claims. So in that case, actually, the cost will be higher for the taxable person. So now, in this case, for reconciliation, they will have to, first of all, pay the full amount of tax and administrative penalties. But and not only that, but 75% of the evaded tax also they will have to pay. For deliberate failure to pay administrative penalties, full amount of the tax, administrative penalties, plus 75% of the tax evaded. And a third situation is also mentioned. So they will reconcile the tax claims on payment of the following: 200,000. Third scenario is that the person has to pay 200,000 for each of the crimes listed in Article 25(4) of the Tax Procedures Law, plus if any of these crimes resulted in tax evasion or concealment of tax evasion, then what will happen? They have to do full payment of the tax, original tax, the administrative penalties, plus 75% of the evaded tax. So that's very heavy. 200,000 for each of the crimes that were committed, plus all of that. Then we come if more than one of the acts listed in Article 25(4) of the Tax Procedures Law was committed for a single purpose, and they were indivisibly linked to each other. Reconciliation for all of these acts can be made in the return for settlement of a single amount of either 100,000 or 200,000, depending on whether the reconciliation is sought before or after conviction. So naturally, 100,000 is before conviction, 200,000 is after conviction. Uh, Full payment of the tax and administrative penalties is also due, plus the amount of equal to either 50% or 75% of the evaded tax, depending on whether the reconciliation is before or after conviction. So 50% of the evaded tax is before convention, 75% is after convention, relates to after convention. After conviction, by the way. Okay. Uh, If the FTA approves the reconciliation application, it will issue a record as proof of the reconciliation and its terms. The record must be signed by both Federal Tax Authority and the individual who submitted the reconciliation application. So both parties involved, FTA as well as the individual who submitted the reconciliation application, they will sign that application. The FTA will then issue a copy of the record to the individual after they have paid the full amount owed as part of the reconciliation. So the person has to make all the payments that we saw earlier on the 100K, 200K, original tax, administrative penalties, 50%, 70% of the evaded tax, etc. FTA approves the if FTA approves the reconciliation process, it will issue a record as proof of the reconciliation and its terms. The record must be signed by both FTA and the individual who submitted the reconciliation application. FTA will then issue a copy of the record to the individual after they have paid the full amount. The record must include what? The details of the accused or convicted person, the description of the charges attributed to the accused or the convicted person, the date and place of their occurrence, and the articles of law applicable there. So what kind of offense they had committed basically. After the details of the person, then the particulars of the offense committed, date, place, occurrence, etc. Value of the tax and administrative penalties that were payable, that also will be identified in that record. The percentage and value of the additional amount of reconsideration for the reconciliation. The percentage and value of the additional amount of consideration for the reconciliation. So, how much addition percentage and value of the additional amount for consideration for the reconciliation? How much fees are chargeable, etc., and what total amounts have been ascertained. FTA has absolute discretion as to whether to accept or reject an application for reconciliation process. So this is the pure discretion of FTA. So that's about it. This was chapter 23 on penalties that we just went through. We will inshallah uh, join again in the next chapter, chapter 24. That was chapter 23. Thank you very much.